Hello, and welcome to The Rules of Investing, a podcast that gets inside the minds of leading investors, economists, and industry experts, and is brought to you by Livewire Markets. My name's James Marlay. I'm a co-founder of Livewire, and I'll be your host for today. My guest is Mark Mobius, a globally renowned investor and pioneer in emerging markets investing. Mark has a PhD in economics from MIT and began his career in Asia, eventually being recruited by Sir John Templeton in 1987 to lead the Templeton Emerging Markets Fund. Under Mark's leadership, the fund expanded from $100 million in 6 markets to over $50 billion across 70 countries. Today, Mark runs the Mobius Emerging Opportunities Fund, enabling him to invest in emerging as well as developed markets where companies are increasingly participating in the emerging markets growth opportunity. Mark, thanks for joining The Rules of Investing, and great to have you on the show.
Oh, it's a pleasure.
I need to do a quick call out to Eric Nguyen, who is a Livewire alumni and now works alongside you and helped facilitate this interview. So Eric, a big thank you. And Mark, I hope he's in good hands doing some good work with you at Mobius.
Definitely, yeah.
Now, you're speaking to us from New York. You're a noted traveller. I was keen to understand what were you looking for from the trip, and what have you found on the ground so far?
Well, the reason why we travel is to experience different places and to understand what's going on in the environments. It's not only when we're investing, not only about companies, but about the environment in which the companies operate. So every time we go to a different city, we learn something new. And it's a never-ending quest, because not only is it's a situation where you're learning something about a city, but it's changing as well. So you have to be ready for these changes. And that's the reason why we travel so much.
Coming from New York at the moment, it's sort of at the epicenter of some of the big changes that are taking place in markets. What have you learned? What have you picked up from being on the ground there at the moment?
Well, one of the things we've learned, of course, is that with the Trump presidency, everything is uncertain. People are not clear about what's ahead and how they should make plans for the future. So many people are just pulling back and saying, oh, wait a minute, let's not do anything until we learn how all this is going to pan out. So there's a sort of a freezing of operations in many of the companies we talk to.
Yeah. Now, you would have invested through multiple, you probably count them on across 2 hands, maybe more, periods of dislocation and change in your career, some of them quite extreme, I'd imagine. How are you thinking about the current change and the dynamics in global economies, and particularly emanating from the tariff policies in the US, and sort of how it flows through to your investing decisions?
Well, what's happening is that it's not only about the United States and Trump, but it's about what's happening globally, because the changes wrought by Trump is affecting the globe. As you know, he had that famous list of countries with the kind of tariffs he wanted to impose. And that's resulted in all these countries thinking anew about what the future is for them and what kind of changes they have to make. So it's quite a very, very important development that's taken place. Some countries will come out on top, will do very well, some will not. But the bottom line is that everybody's thinking about what kind of changes they have to face and what kind of developments they will be witnessing in the coming years. So it's quite a revolutionary development that we're witnessing.
And how well positioned do you think countries, I know it's a general term, but how well positioned do you think they are to respond to changes? When COVID hit, people had to rethink their supply chain logistics and all that sort of stuff. Do you think companies and countries are better placed to respond to dynamics in the global economy these days?
I think many companies are ready. They've had some time to develop new supply chains, but I would say most of them are not, because many, companies that have been dependent upon China have had the problem of finding a new source, a new manufacturing source, a new supply source. And it has not been easy, because the Chinese prices, quality, speed, etc., is really unmatched around the world. So it's been a real difficult situation for many companies, and they resisted change. Now, of course, they're forced to make a change, and of course, they will find opportunities in India, in other parts of the world. Already countries like Vietnam are beginning to pick up the slack, but a lot more has to be done.
Just taking it back to the beginning, you were raised in the US, educated there, quite a while ago now. What are some of your recollections of that time, and what stuck with you?
Well, it's interesting because I'm in New York and I was born in Long Island, which is not too far from where I'm sitting now. It's about an hour drive to get to my hometown, Belmore, New York. And that was an incredible childhood I had with, those days, Long Island was full of potato fields and other farms. So, of course, now it's built up, but at those days, it was great for a young guy like me to be growing up and enjoying the countryside. And I went to primary school there and to high school, and it was a great childhood. Then I went on to Boston to go to Boston University. I got a scholarship. My father died while I was in high school, so there was no money in the till for my college education, but luckily I got a scholarship and was able to go to Boston University and on to other universities, ending up at MIT. So it was a great experience. And of course, being new in New York was a very good thing too, because with a 1 hour drive into the city, we can enjoy all the great Broadway shows, the museums, and the rest of it. So I still enjoy coming to New York to enjoy this kind of thing.
And you've obviously pursued a career in investing and learning about businesses. Was that something that was spoken about at home? Were your parents interested in investing, or were they business owners? What kind of kindled that interest for you?
No, not really. My mother came from Puerto Rico. My father came from Germany. They were both very hardworking people. My father had a bakery, so he was, he had some business experience, but not much. And I must say their investing experience was not very good, because I remember they invested in a company called John's Manville, which was very heavy in asbestos roofing, asbestos insulation. And you know what happened to that.
Yeah.
So they didn't do very well investing. So I didn't learn very much from them regarding stock market investing.
Economics at MIT, is that where the interest was really fueled?
I would say yes, that was the real beginning, in the sense that I did my thesis on communication satellites. And that was during the Kennedy era. I don't know whether you remember. They launched the ComSat Corporation, and that was my very first stock investment based on the thesis that I did. And the stock did very well. So it whetted my appetite for more.
Yeah. Now, before you got into investing, I understand you did some roles in marketing and communication, perhaps. One of the feathers in your cap is that you introduced Snoopy to Asia. How did that come about?
Well, that was an interesting story, because at one point I ended up in Hong Kong. By the way, when I was in university, I got a scholarship to study in Japan. And that really hit me. I mean, I was in total shock when I experienced the Japanese culture, and I wanted to get back. So after finishing at MIT, I went back to Japan and started working for a survey research company. And I went on to Korea, Thailand, and finally Hong Kong, doing that kind of work, survey research. Then I decided to start my own consulting company. So I was doing consulting for a number of businesses around the world, in looking at Asian markets primarily. And one of my clients was the owner of the Peanuts franchise. Peanuts was the comic strip, Charles Schulz. And of course, one of the characters in Peanuts was Snoopy, the dog. Now, they asked me to research manufacturing in Asia. So I found them a number of manufacturers in Japan, Korea, Hong Kong, so forth. And then one day I told them, why don't you start selling your products here in Asia? And they said, oh, we didn't know there'd be a market here. I said, of course, there are children here and they love toys, and there's no reason why you can't sell. And they said to me, well, why don't you do it? And that's how we got involved.
And was
in
it
selling
successful?
Snoopy toys.
Did it take off?
Yeah, it did very well. Did very well.
Good. Your journey into investing, do you want to maybe explain how you went from marketing Snoopy toys and selling, doing the that side of things through to getting involved in investing, and particularly why emerging markets over developed markets where you grew up in New York?
Well, what happened is that, the Snoopy business got so big, it overwhelmed the consulting business. And I really was not interested in continuing that. So I turned it over to my staff and decided to look at the stock market. And because I've been doing some research on stock markets for some clients, and joined a brokerage firm, Vickers DaCosta, which is a British brokerage based in Hong Kong. After a few years, they sent me to Taiwan to open an office, which I did. And while I was in Taiwan, they had a directorship of a company which was the very first fund in Taiwan, a Taiwan fund. And I became president of that eventually. And it was the Taiwan ROC Fund, listed in New York. After a few years doing that, John Templeton, the Templeton organization, came to me and said, look, we're starting a new emerging markets fund, and would you like to run that? It was a difficult decision because I was living like a king in Taiwan, but I decided to go for it. And the rest is history, as you know, in 1987, with $100 million to begin with. And only in those days, we only could invest in 5 markets. Most markets were closed, but then gradually started opening up more and more markets, and it expanded to billions of dollars under management. So it was quite an adventure.
And did Sir John Templeton have an influence on your investing style, or were you sort of free to, invest the way that you saw fit? What was the relationship with him like?
Oh, it was a very big influence because he was a true so-called value investor. He was very much like Buffett, looking at the value, looking at long-term value. And, Templeton, like Buffett, was a child of the Depression. So they watched their money very carefully and were very prudent in the way they invested. And that was true of Templeton as well. So I applied same principles of value investing, finding stocks that had good value, take a long-term view, and so forth.
And do you recall what was the opportunity set like for you in emerging markets back in those early days around 87? I imagine, they still feel like a stretch, particularly for a lot of Australian investors, doesn't take up a big portion of their portfolios. Was it even more so back in 87? Was the value everywhere, but hard to find the next buyer?
The value is there, there's no question about it. But the question was getting in. As I said when we started, the only markets we could enter at that time were Hong Kong, Philippines, Malaysia, Singapore, and we had some investments in London. Those are the only markets that were open, but the values were there. Very low PE stocks. Some companies were growing at a good pace. But then we started opening up other markets, and that's where the real growth came. There were opportunities everywhere. Hundreds of companies in Latin America, in Asia. We eventually opened up in Korea, Taiwan, and these other markets. So there were tremendous opportunities everywhere.
Yeah. I'm not an emerging markets aficionado, Mark, but I recently read a book called Red Notice by Browder, which I just couldn't put it down. I was just totally enthralled by the stories, but also just this immense value that you talk about with the unlocking or the privatization of the state assets in Russia. I was just wondering if you had an experience of your own or something similar where you could talk through the process, because it's not straight line putting money into a share market and watching them go up. There was a lot more to it to extract the value. Is there an experience that stands out from your recollection of going and finding that deep value?
Well, Russia would be an example, because I was investing in Russia at the same time that Bill Browder was investing, because he was a little earlier. He got in there because his father had very close contacts with the Communist Party before the dissolution of the Soviet Union. So he was able to get some incredible bargains. But even with us arriving later, we were able to find incredible bargains. One good example is a company called Lukoil, was one of the oil companies run by very, very notable oil people in Russia. It was a totally private company, and these guys that were running it were expert oil people, and they ran a very tight ship, fast growing. And that was an example of the kind of company that we could find in Russia and invest. So it was, opportunities like that were everywhere.
And what about the risks? I mean, were there times when you were unsure as to whether you were going to be able to get your money out, get your money back? Maybe it's the fear not so big these days, but I imagine there would have been times where the trade didn't go quite as smoothly as you would have hoped.
Oh, of course, there were many times when things didn't go well. But interestingly enough, we never had a problem of getting money out, since we looked very carefully at what the environment was in each country in which we invested, and kept tabs on what the government moves were going to be. So, for example, at one point we were in Venezuela investing. And when General Chavez took over, we decided to get out, because he was clearly stating that, look, we're going to take over all companies. We're going to make everything owned by the state. So at that time, I decided we had to get out. But it didn't happen that often. It's really interesting how these countries really adhered to the free enterprise system and allowed people to invest and get their money out.
Yeah.
The thing you have to watch, of course, was devaluation, currency devaluation, that sort of thing. But even then, when there was a big devaluation, we often found that we could find good opportunities, because a devalued currency meant that we could come in with US dollars and buy much more in terms of assets.
Yeah, yeah. How has the emerging markets opportunity evolved over time? Because those Browder days, the opportunities you're talking about, they seem like once-off style opportunities. Emerging markets have been opened up, and it's easy for people to participate in those markets. Has the opportunity for deep value disappeared? Is it much harder to find those opportunities today than it was 30 years ago?
Not really, because there's so many of these markets and there's so many things happening. To give you an example, Argentina was a basket case. 10 years ago, they were really in bad shape, currency devaluations, all kinds of things. Then you had a new administration come in, and you've seen the Argentine market go through the roof in dollar terms. So even now, there's such opportunities and change taking place in these markets that you can find incredible opportunities. And it's not only limited to these markets in terms of change of government administration, but also what's happening in China today, how the Chinese market is down as a result of the Trump administration, and things could change and result in an incredible new opportunity in China. So there's always something happening around the world, and then you have to keep your eyes open and look for opportunities. One of the most important developments is that the per capita incomes of these countries, because they were growing at such a rate, you must remember, even today, emerging markets are double the growth rate of the United States, for example. So you have a place like India, 1.2 billion people, their GDP growth rate is 7 to 8%, which is incredible growth. So you've seen situations where I remember first going to Korea and seeing a real wasteland. There was they were very poor. They had suffered through the Korean War, through Japanese occupation, et cetera, et cetera. Today, per capita income is equal or better than Spain. So you've seen these countries really come up. And one of the problems now in defining an emerging market is many of them now don't fit the description that we had originally, was low and middle income countries. Many of these countries are no longer in that category.
Yeah. Mark, just with regards to, emerging markets investing, it sounds like currency has played a really big role in identifying opportunities. It's, to me, one of the hardest things for people to forecast or get certainty about. Have you learned anything about getting a grip on the direction of currencies over your time that you could share with our listeners? Because it's one of the parts of the market that always seems to go the opposite way that people expect.
Well, there are many techniques for evaluating currencies, but at the end of the day, it's totally unpredictable. If you talk to any currency trader, you'll notice that many of them are nervous wrecks because it's very difficult to predict which direction a currency is going to go against the US dollar or against the Australian dollar. But what we do is say, okay, let's look at a company, for example, in Brazil. Let's look at it in terms of not only its earnings power, but its value in terms of assets. So what we did, for example, when inflation in Brazil was 2,000%, what do you do? How do you look at these companies? And we said, look, no use looking at earnings, because the earnings in local currency are pretty meaningless if you have inflation at 1,000%. So what we did is start looking at assets. What's the value of their assets in dollar terms? And that's the way we invest. If the assets are selling at a price far below their true worth, then we can invest wisely and make money. And it's worked out very well. So there's lots of ways of getting around the currency problem. The other situation with currency is that when you look at individual companies, their price will adjust to the currencies. So if the currency is devaluing, you'll see that the value of the shares in dollar terms is actually holding steady, and in local currency terms going up pretty dramatically.
And Mark, you mentioned at the start, or I introduced the new strategy, which I believe is relatively new, the Mobius Emerging Opportunities Fund. Maybe tell us a bit about the mandate, because it's not a pure emerging markets fund. You can obviously hold high levels of cash. Give me a bit of a flavor for the mandate or the strategy and why you've set it up that way.
Yeah, what we found over the years is that the restrictions imposed on normal mutual funds are not good. In other words, restrictions really hold you back. So I decided I wanted to start a fund that didn't have the normal restrictions that you have in mutual funds. For example, as you know, with mutual funds, you say you can't have more than 10% of a company in the portfolio, et cetera, et cetera. You got to have diversification, et cetera. So I said, let's do away with that by having a hedge fund, which gives us the freedom to invest the way we want to invest. The other thing, and the reason why I call it emerging opportunities, is because I found that, okay, emerging markets are great, but they represent a small portion of the total global market capitalization. For example, the US market now, I think, represents something like 75% of the world. So why are we overlooking the US? Because the US market has companies that are actually emerging market companies. I mean, you take a company like Apple, where do they make their products? They're made in emerging countries. Where's the growth of their earnings? In emerging countries. So we decided, let's not eliminate these markets, whether it be the US or markets in Europe, the so-called developed markets, and go into these markets and, of course, benefit from the growth of emerging countries, but benefit through going into companies that are getting their earnings or their supply chains from emerging countries.
Yeah. There's a saying in markets that the economy is not the market, and you've referenced it a few times, the appeal of the high growth rate, economic growth rates of emerging markets companies. So clearly you think that there is a strong link between economic growth and the opportunity in stock markets. Could you maybe talk me through that a bit?
Yeah, definitely. As I said, if you look at the average growth rate of developed countries, including the US, and emerging countries, it's about double. Emerging countries have about double their growth rate, even with all the basket cases that you have in emerging countries. But the weighted growth rate is double. Now, if a country is growing at double the rate of, let's say, looking at a company in America, let's say a company is selling sports shoes in America, and there's another company in India growing very rapidly in line with the growth rate of the country. That company is going to be doing much better because the country is growing at 7%. That means consumer growth is probably equal, if not better than that, compared to an American company that has a country with a 3% growth or 2 or 3% growth. They're not going to have the same consumer growth in America that you have in India. So that's where the opportunity is, where you're going to get an incredible push from not only the company's development, but the country as well.
Yeah. A final point before we get into a couple of questions that we regularly ask on the podcast. India, you've called out as an area of opportunity and interest for you. Maybe talk me through the thesis and why you're so excited about finding opportunities in India.
Well, first of all, it's 1.2 billion people. If you look at the population compared to China, we estimate now, by the way, China is not 1 billion people, probably closer to 800 to 900 million. China's growth has stagnated. The one-child policy really put a damper on new childbirths in China. So they've really been going backwards in terms of population. So that's one aspect. The other aspect is that the average age in India now is about 26 years, compared to about 38 in China. So you have a young population, you have a big population, and therefore you're going to have one of the reasons why India is growing at 7 or 8% is because of this combination of factors. In addition to that, and this is probably something which is the most exciting, technology is hitting these countries. The emerging countries are growing not only because of this lower base, but because of technology, the internet. This is having a big, big impact on these countries, and that's accelerating their growth rate. So these combination of factors is really very, very exciting. As we travel around the world, we see the impact of this happening.
Great. Well, as I alluded to, our podcast has 3 regular questions that we put to all of our guests, and love to run them past you, Mark. Get a few of you. So the first one is, I was hoping you could share a story from a big win or a big loss from your career. What happened and what was the lesson?
A big win many years ago in China. We were investing in a company called China High Speed Gear. This company made gears for the wind power companies. And I remember visiting the factory, and I looked around and I saw the incredible equipment, very modern equipment, really high quality work they were doing. And I said, this looks interesting. Of course, at that time, wind power was just taking off. That was the really high growth of wind power and solar power, but wind power was really taking off. And this company went from strength to strength, and we made an awful lot of money off that investment. So that was a real winner.
And was there a particular lesson that stuck with you from that opportunity?
I think it was the the fact that we had visited the company. At that time, many people thought there's no way that China could keep up with the US or Europe and develop high quality kinds of products. And that to convince me, looking at this factory and the work they were doing, convinced me that these guys were going to do very well. And I think that was the turning point.
Yeah. What do you think investors are getting wrong about markets today?
I think they're too short term. They're getting panicked by the developments that are taking place on tariffs and so forth, and they don't realize that Trump and the administration in America may say we're going to put a 200% tariff, but that's not going to happen. That's just a bargaining point. So I think people have to be patient and be willing to take what's coming out of the U.S. with a grain of salt, so to speak, and analyze it for what it is. At the end of the day, a lot of these changes are not going to take place as rapidly as people think, or at all, whether they're going to do so at all. So I think they have to be patient and be willing to roll with the punches. Let's put it that way.
Yeah. Now, this question is a hypothetical for all our listeners out there. We're certainly not recommending putting all your money into one stock, but it is meant to be an exercise in long-term thinking, to your last point, Mark. So if markets were to close tomorrow and stay shut for 5 years and you could only own shares in one company, which one would it be and why?
It would probably be in my own company, Mobius Investments Limited. At the end of the day, putting your eggs in one basket is very dangerous. And unless you control that basket, you watch that basket carefully. So I would say there's no listed company that I would put all the money in because it would be just too dangerous. I would put something in my own company, or I would put something in a diversified ETF. Probably best bet would be S&P ETF, because there you have a diversified portfolio. It's one stock, but at the end of the day, it's diversified.
Yeah, very good. I am also going to give you a couple of bonus questions. And for listeners, Mark is an extremely well-traveled man. The stats on your website tell me you visited 112 countries during your time, over 1 million air miles clocked. So I've got a couple of questions to draw on some of that travel experience, see if we can get a few bucket list items for our guests. First one, which is the best airline to fly with, Mark?
Right now, it's Emirates Airlines out of Dubai. I would say it's the best airline, and maybe second along that actually in the same region would be the Qatar Airways. Those two airlines are really first class, very good.
Any airlines in your career that you'd probably be hesitant to book again with?
Probably American Airlines. No, there's some good airlines. Delta is pretty good in America, but generally speaking, American Airlines in America is not very good.
As I mentioned, you visited 112 countries. If you could only make one more trip in your life, where would you go and why?
Probably Brazil during Carnival. Brazil is an incredible country. Not necessarily the best place to invest. It's difficult to invest, but it's a wonderful country. People are wonderful. And if you go during Carnival, usually February, March of each year, you will have an incredible time.
All right, great tip. All right, which dish have you tried on your travels that completely caught you by surprise by how good it was?
The difficult question is I've had many different dishes around the world, but I would say actually Australia does pretty well in their steaks. Having a steak in Australia, you can really have something that's really first class.
Oh, that's a great call. I agree with that. We can do some oysters for the entree for you as well, Mark. I just have one final question. I was thinking about this with all your travel, the fact that you've had a successful career and you're still doing it. is investing the byproduct of your travel, or is travel the byproduct of investing? It seems like you've been able to find a career where you can mix these two passions.
That's a good question. I would say probably investing is a byproduct of travel, in the sense that once you start traveling, you see opportunities, and therefore you want to invest. Of course, the reason why we were traveling was to find opportunities, but it's very often it's the other way around. You travel and you say, "Oh, this looks like an opportunity. That looks like an opportunity," and then you begin to invest. But you have to it's a constant learning process. I always tell my colleagues, be a student, be ready to learn every day, every hour of your life, because things are changing so rapidly. You have to keep an open mind and not say, "Oh, I know it all." At the end of the day, you're learning every day.
Great. Well, Mark, thank you so much for taking some time out to speak with me and to share some of your stories and insights with the Livewire audience. I really appreciate it.
Thank you. It's a pleasure.
Great. Well, ladies and gentlemen, I hope you enjoyed that chat with Mark Mobius. Remember, hit subscribe and follow the podcast on your favorite podcasting platform.